The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom. How's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bid. I get a lot out of them. I really love the intros you do, the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Hi, welcome to the show today. Wow! Did I do that right? Tom O'Brien's off today. I'm John Logan filling in for him. He's going to be back tomorrow. Don't worry. I do a show every morning from 8 to 9 called the Global Market Pulse. Have a good time every morning, pre-market. Try to cover quite a few things before the broad markets open in the United States. Please feel free to join us. And what we're going to do today, we're going to try to get two good relationships of mine on the phone with us as soon as we can. Hopefully have some video. Steve Banger hopefully will be joining us the first hour here. We're going to also talk to Steve Dahl the second hour. And one of the things I can see that some people are making comments about my Tom O'Brien Tiger growl here. And I apologize for it being not exactly the same, but we're going to try to get through that. We're going to talk with Steve about some option plays, and you know, if you watch my show every morning, you know that we pretty much follow the rule of our profile derivatives, our market profile derivatives. And what we're going to do is talk to Steve about some S&P plays possibly, and some volatility plays around options based around some of those profiles. And one of the things that you know, he has really specialized in over time. He's been a member of a lot of different exchanges, the Life Exchange, the CME, quite a few different, and I've got a list of those exchanges here. They're pretty extensive. Eurex, CBOT, Matif, the Milan Stock Exchange. He's traded a lot of volatility products, worked with a lot of hedge funds. So hopefully we'll be able to get him on as soon as possible. To talk about some of the ways to possibly look at some of these markets and maybe hedge some bets or take advantage of some things that are going on that might not necessarily be directional. What we've got now in front of us, if you're looking at the screen, is we've got the S&Ps. We've got them on a long-term basis. 1975 has been a big number that we've been talking about for a while, that have been the upper targets when it comes to trading these S&Ps. And we've talked about buying support and buying breakouts really from the 1832 level. That was about 150 S&P points ago. And the reason we've been talking on that level is because we've used the internal breadth statistics that we look at, and that's an aggregation of our internals of the S&P 500, looking at profiles and getting a net positive negative number, and being able to look at the inflection points along the way on the S&Ps, mainly looking at the dailies to kind of regulate that weekly trade to the north side. Now, we've looked at these targets at 1975. We almost reached them last week. We backed off. We found support again at 1918, this midpoint of this current long-term profile. And as we approached it yesterday and today, we talked about, you know what, it's not time to really look at this as a let's reverse everything and go short opportunity. We've looked at it as we've reached our targets. We need to sit tight. We got a huge report tomorrow morning, and we have to kind of wait and see where we have a Friday's close. Now, if this thing completely comes unglued on the upside after that report, then what we want to do is kind of, you know, let things settle out. We always want to trade the reaction, not the action. It might be time to sit on your hands a little bit and just kind of, we've gone a long way pretty quickly. We've got a lot of the internals of the S&P 500, a lot of the ETF structures, all that that comprises the S&Ps, we've had a lot of those show signs of, we all want to head north. But again, we've gone a long way in a short amount of time, and we're going to try to decipher, what might be the plays now that this is, in front of us. And I think we have Steve on the phone now. Steve, are you with us?
Hey, John, how are you? I am here.
Man, it's good to hear your voice. How are you?
I'm good. It's a beautiful day, right?
Good. Yeah. Well, I to some degree introduced your background. I alluded to the fact that you've been a member of the Life, the Eurex, the CME, the CBT, the Matif, the Milan Stock Exchange. You've worked with hedge funds for years, and the option arena is something you've focused primarily in, and I'd really like for the listeners, if you can, to kind of get a piece of your mind when it comes to what the volatility plays might be now, and possibly some direction on the indices themselves.
Sure. I mean, as you well know, John, everybody is always trying to find a better mousetrap to figure out where the market is going. And my particular mousetrap is basically trying to figure out where the market is going based up on volatility directions and the volatility structure of the market. And that's basically where I see my edge in a nutshell.
Okay. What would, okay, so we've traveled a pretty good ways in a short amount of time here. When it comes, are you looking at, the volatility picking up? Are you looking at, on the S&Ps, do you think we might settle back here, or do you think we have, something in store farther, creeping farther north on this thing? Because I mean, we're trading above a long-term profile now, above 1975, and do you think the VIX is going to, what are your feelings on the volatility index itself?
Well, I mean, in a nutshell, and just to provide some perspective for your listeners, the volatility curve serves as a spring. And when the volatility curve is compressed and it's kind of like inverted, I will talk about that in a moment, you have the potential for significant declines in the market.
Okay.
And that inversion in volatility basically means that the future volatility, as can be seen in the futures contracts, is trading at a discount to the current VIX index value. And that actually has been the case for pretty much, I want to say, 42, 45 days up until earlier this week. So earlier this week, the volatility structure actually reverted back into what's being called contango, whereby future volatility is once again trading at a premium over and above the current volatility number, and the VIX right now is at a 16.54.
Okay.
So for the market to go higher, we need a normalized environment, and that is what we basically have right now.
Steve, I hear the music. Can you stay on the line, and we'll come back after the break, and I'll probably have Andy Hecht on also.
Sure.
Okay, great.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And Steve Banger's with us. We were trying to get into, to some degree, about some option plays here with him. Steve, are you still there?
Yeah, I'm here.
Yeah, and we're talking specifically about the volatility index. If you could continue a little bit, that would be awesome.
Yes. So what I was saying is for 42 days, we were in a situation where the volatility curve was inverted or in backwardation. And that actually normalized earlier this week. So because of the normalization, the way I look at it now is that the market should basically drift higher.
Right. So what we've done, I'm showing our daily I'm showing our daily profile chart here with the S&Ps. I was showing the weekly before, and we talked about that 1975 number. What's happened is when we started, we had a little bit of a divergence here with the S&Ps as they were going down. Then we were kind of starting to get inclined to start buying above that 1832 area, and we've used the daily profiles to really kind of regulate that trade up. And right now, like Steve was saying, the volatility index coupled with looking at the internals, and I'm looking at our breadth calculations, Steve. I'm showing we had this big crossover happen in the internals about the same time we started crossing the border of that 1832 area around February 19th that week. That passed there. And with what's going on, like with the report tomorrow morning, because this is kind of what everybody, I'm assuming, wants to know. If we have this big report coming out tomorrow morning, do you think the impact of that, do you think that could rattle the whole cage, and we could, all things considered with the volatility index and the breadth calculations, do you think we could, always we could have the downside risk, but what are your thoughts about how to play that?
Well, obviously S&P right now is basically at the top of its range, right? And if you look at possible retracement areas, we are now bumping up against the 61.8 Fibonacci retracement level, which comes in right around 2000, like 1999, when you look at the the November 2015 highs and versus the lows from earlier this year. So I think we are running a little bit of overhead resistance here, and the market is sitting at the top of the range. So I think just gut feeling, going out on a limb, and I usually don't like to do that because people always call you out on afterwards, right?
Of course.
Yeah, but I think
course.
no matter what the number is tomorrow, the market is going to drift back a little bit here. But I believe that any type of weakness should be bought.
Yeah, I'm tending to agree with you there. We've kind of got a collection area, it seems, down, in a support fashion now, and these internals. Steve, I was looking at, I'm looking at our ETF profile grid right now on our long-term, intermediate, 4-hour, 1 hour. We've got one red cell out of, what is that, 4 times 4, 16 different cells. The utilities are showing to some degree negative breadth, just barely on our daily, and that's basically because the 10-year and the 30-year pulled back a little bit, and that dividend play on the utilities has just kind of evaporated a little bit, even though I still like the utilities. A lot of these internals, what I'm trying to say, Steve, are from a net profile, net positive breadth, negative breadth, are just screaming north. And that's, yeah.
If I may add to that, just because you touched on the utility, and as you know, John, I only started looking at your scanner recently. I mean, the fact that the utilities, which traditionally serve as a defensive play whenever the market heads south, are now trading at the bottom of your profile and signaling weakness, if anything, is actually a bullish indicator for the rest of the market.
Right. Right. Yeah, I'm going to pull that up right now so we can see that in an ETF situation here. What you said is really important, and what we've been talking about all week is the utilities have kind of found some support again, but this is the overhanging concept here. We've got a new profile attempting to appear. That means a new supply area, if you will, above the market on the utilities, which, as you said, is, it's kind of interesting how these things have kind of slowed down a little bit. And that would be a new trading range at bare minimum that's going to be sitting there for the utilities. And it could, again, continue to move north. I'm really impressed, actually, how it hasn't pulled back more. And the 10-year, I'm looking at the 10-year too, Steve. I'm going to pull this up so you can see it. The June contract, we have busted down below our daily profiles, but, we've got a weekly, bottom of our profile here on the long term, which takes precedence over that. And then do you think, because talking about the utilities and how these things are interconnected, do you feel that, the treasuries might relax even farther here? Considering what you said about the S&Ps and that inverse relationship, what do you?
Well, I think generally speaking, no matter what, we're in an environment where we're going to see lower rates on a global level. I think that's true for Europe, that's true for Asia. So I think lower levels are here to stay, and the trend will continue. So there might be a short-term blip tomorrow when we have a really strong, or if we were to have a really strong unemployment number. Right. I think anything above 220, 230 would certainly do it. Right. But once again, I think that rates are gonna go lower, and that in turn should support utilities, because at least in theory, the dividend in the utilities is a little bit better supported. And that is certainly worth to consider then.
Right, and in turn, market seems to like lower rates. It's been a different scene, actually a good double-edged sword over the past 6 or 7 years. Market loves bonds and notes going up, so.
Yeah, if you really think about it, and I know I'm stating the obvious here, right? But the stock market, at the end of the day, is a supply and demand play. And right. I'm not necessarily talking about individual stocks. What I'm really talking about is a supply and demand play on money, the amount of liquid available assets which can be injected or have to be withdrawn out of the stock market. And the truth of the matter is, as long as rates stay low, it is an indication that there's excess money swapping around the system, which is the declared goal of the central bankers anyhow. Right. And as a continuation of that play, it really means that excess hot money, I like to call that hot money, which is swapping around the system, will find its way into the stock market.
That's something else to think about here. And It's also kind of a safety play. I mean, you look around the globe, it seems like there's so much unrest or uneasiness or indecisiveness, I guess. This may just continue to be the U.S. stock market, and the notes and the bonds just continue to be the place to park money, period, which would again put a bid in the marketplace. Yeah.
So let me ask you a question here, then, John, because
Okay.
you're always the one asking me questions.
Okay.
What do you think of gold? Because that's the one thing I can't figure out for the life of it right now.
You know what? That's the scary thing. We talked about that this morning. I'm finally becoming really bullish on this thing. Not hopefully not picking the high print, but we're actually now are this minute eclipsing the top of our profile on our long-term weekly, which is really, really weird that all this is going on with gold at the same time the market's going up. Steve, thanks for coming on. I know you got to catch a flight somewhere.
All right.
Thanks again, man. Okay, we'll
Thank
be
you,
back,
John.
guys.
Talk to you later.
Yep.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, welcome back to the show. I'm John Logan, filling in for Tom O'Brien today, and I think we're very honored if Andy Heck's on with us right now.
How are you?
Hey, man, I apologize.
No, that's okay. That's okay. No
I'm
problem.
not used to the
Listen,
schedule, and okay, go ahead.
I wanted to let you know. I mean, I go at these markets from a totally fundamental perspective. And I'm seeing some really important things that I want to point out here. First thing is yesterday, I don't know if you saw it, the price of copper broke out above kind of a wall of resistance at 215, and now we're up trading it at 221. The price of iron ore has moved from $36 a ton to $50 a ton over the last 8 weeks. The price of lumber today is limit up above the kind of swing point in that market. Oil's been creeping higher since making lows in February, and the Baltic Shipping Index is up from 290 to about 335. That's about 14% in less than a month. Right now, gold is really moving higher. Silver's moving higher. And I think we're seeing big signals of a bottom in commodities here. I think there's a lot of things going on. Gold, I think, is being totally driven by fear. That kind of kicked this off. The one disappointment that I'm seeing in the silver and platinum market is they continue to really lag the price of gold. You have the silver gold ratio at 83 to 1. That's the highest level since 1995. And you have platinum trading at a $316, $320 right now discount to the price of gold. That is an all-time low. So these markets are diverging like crazy. But overall, from a macro perspective, John, copper, iron ore, lumber, crude oil, all sending us big signals here.
How's the CRB index doing in general? Have you been monitoring that?
Well, I don't really watch that. I watch the individuals, but knowing the components, I know it's got to be doing really well right here.
Go figure.
Look, today the dollar's down, 624 points or something like that? But we're really, the copper breakout was really important to me. I look at the fundamental commodity markets kind of as a three-legged stool of benchmarks. And my benchmarks are crude oil, copper, and lumber for the industrial world. And all of them are moving together now. And they're all moving to important technical levels. So that's kind of telling us that I don't, is the bear market over for commodities? I'm not smart enough to know that. But I am seeing that technically we could have some very, very big retracements. Look, copper can move up to $2.96 a pound, which is 75 cents above the current level, and still be in a bear market.
That's amazing.
There's a lot of room. There's a lot of room, and there's a lot of opportunity. When markets get crazy and they diverge like this, it means that opportunities abound. But you got to be really careful because volatility is going to get crazy. As we're seeing right now in gold, I think gold just traded up to like 1269.
Yeah, no, I was watching it as we were doing the show, and I was like, oh my God, it's.
It's interesting that silver's not catching a bid here. I think silver will. I've kind of been sitting on the sidelines waiting for silver to have its $1.50 up day. And I think that the thing that could propel that is some strength in the copper price. Silver kept looking over at copper and saying, hey, industrial metals are still weak. But I took a quick look before at all of the LME metals, the copper, the aluminum, the nickel, the lead, the zinc, the tin. They're all up now in 2016. And they were, under a lot of pressure in January and early February.
Yeah, it's. Do you think crude kind of putting the stake in the ground to some degree on the bottom? Do you think that kind of fueled some of this, fundamentally speaking?
I'll tell you, from crude is such a political animal, and you have a situation in crude now where you have this crazy cartel that has huge problems within it between Iran and Saudi Arabia. You have Putin, who's kind of acting as a mediator, a deal maker, being front man for Iran with Saudi Arabia. And I think crude has a room to get up to $40. And it's a pretty simple way that I look at this. When we came down last March to make lows at $38 or something like that, we popped back to 60. When we came down in August to the next low, we pop back to 50. I think that this move can take it up to 40 here, and then we'll have to see. There's still the fundamentals for crude still continue to be bearish, but there's so much more to the crude oil jigsaw puzzle. It's so political. Lower crude oil prices actually lowered the production cost for many commodities, which was not necessarily bullish. But I think that what we're seeing in terms of uncertainty in the world, what we're seeing in terms of kind of a divorce from central bank policy, and people kind of getting fed up with central bank policy and politicians in general, as we're seeing in the election, the crazy election we have in the United States now. This all fuels a lot of volatility in markets, and I think that's what we're seeing.
No, I agree with you fully. I've been talking about it. It feels like these commodities are getting ready to just at least breathe up a little bit, you know, and now they're breaking those technical levels, and it coincides with some of the fundamentals that you're talking about, which is just awesome.
Right. And by the way, you know, look, with something like gold is something that you can't be a fundamentalist with gold. The bottom line with gold, silver, and platinum is that it's going to sound very simple, but those markets only go up when there are more buyers than sellers, and they go down when there are more sellers than buyers. So in gold, you're having a situation where investment demand is always the determinant of price, because supply and demand is very balanced in these markets. So you're seeing a situation now where investment demand for gold is really there because of uncertainty and fear. And I think you'll see that translate to silver. I think silver can really do a huge move up here. You know, the silver gold ratio, the average for the last 40 years is 55 to 1. At a price of $12.67 on gold, that implies a silver price of $23 an ounce. That's almost $8 above the current price. That's a reversion to mean trade. So, you know, something's got to give here.
Right. Well, sometimes those things get disconnected for longer than they're supposed to, but they eventually, ultimately do kind of, you know, like you're saying, get back to reality.
Right. And it doesn't have to get back to reality, you know, to 55 to 1. But I think that the impetus, people are going to say, oh, gold's getting too expensive here. Maybe I'll go buy silver instead. And that is probably what'll get silver going here.
Right. Where do you think silver's got a chance, just as far as the underlying price? Where do you think that would have a chance to just kind of migrate back to in a normal, balanced state?
1641 key technical level here.
Okay.
Above there, you know, you're looking $18, $20. You know, each $2 is kind of resistance. But you know, we're in a different kind of world here. You know, and I think a lot of the presidential election is really important because it's throwing everything upside down. Everything. I mean, it's very entertaining. I really enjoy. I was listening to Dave White and watching Donald Trump at the same time. And this morning I watched Romney. And I mean, there's divergence everywhere. And markets are a reflection of politics and economics. So the markets are kind of validating that we're in unprecedented territory.
Yeah, it's amazing. One guy, Donald Trump, can probably put the fear implicitly into gold himself on a personal level. It's amazing.
And he has a lot of support. And to tell you the truth, I think he's got a good chance of actually winning the general election.
Well, listen, do you want to hang out to the next segment?
Sure. I could stay.
Okay, great. Thanks, Andy. We'll be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi, guys. Welcome back to the show. John Logan filling in for Tom O'Brien today. Andy, are you still with us?
I am still with you.
Great. We've got a caller. Can we kind of, maybe he's got a question and maybe you can answer it. Tom, are you still with us? I apologize for not getting to you sooner. Yeah. Great. Good to talk to you.
Yeah, same here, John.
What's on your mind?
I got a question for you. Do you think they're going to try to trash out that gold contract tomorrow? Or if we got too much volume up here? You know, sometimes they love to trash that thing out on Friday afternoons. I just wonder if they'll take a stab at it tomorrow.
Well, Andy, I'll give my 2 cents, and then hopefully you can give a better 2 cents. We've gone a long way. Gold seems to make these really wild, wacky moves the wrong way before it makes a move the right way. Yeah, they could do that. But again, I'm kind of with Andy on this, and I hope he can expound even farther. There's just an uncertainty out there. This political scene is freaking some people out, and there's a commodities move right now, in my opinion. So I don't see it coming down too much here. Andy, what are your thoughts?
Well, tomorrow's Jobs Friday, as Danny in Atlanta is saying, and gold always moves on that, so it depends on that. I think what you do is you watch what goes on in Australia and in Hong Kong tonight to get a feel, because, I tend to see that on Thursday nights, it kind of gives us the direction in which the gold market is leaning. I expect big volatility, so I could see gold up 20 or down 20 tomorrow. I know that's a non-answer, but, in these days of uncertainty, that's kind of the way this thing is leaning.
Yeah, the smart play.
Through that 1264 number at 1263.90 today. Did we get the volume on that?
I just looked at that. We had on the big day when we got up to the highs the first time, we did 392,000 contracts. Today we've done about 237,000, so moderate volume, but we made a new high. I think if we stay above, those. That 1263.90 level, it'll look good, but I think that's questionable coming into tomorrow. Crazy Fridays always.
Right.
Tom, that number's the top of our profile in the long term. We kind of poked our head above and made new highs and satisfied that at least, but it's not exactly backing off. But this, like Andy said, the smart play is probably just to kind of trade the reaction after the jobs number instead of kind of rolling the dice beforehand. That might be the smarter play. This is a big deal tomorrow because the S&Ps obviously have climbed tremendously, and a lot of the commodities have really elevated themselves lately. We could have a pullback, but that jobs number's obviously a huge deal.
Right. Okay.
Yep. Yeah, well, I think we've reached our targets. Put it that way in the interim is what I see, Andy. And it might be just kind of like a sit on your hands situation for a little bit here.
The one thing that continues to bother me about gold, if anything, I mean, I like the trend and I do like gold here, and I would buy it on dips. But the thing that is bothering me and eating at me is how weak silver and platinum are on a historical basis to gold.
That's well put, Tom. So. I don't know if we've answered your question, but we kind of reached some targets, and big report. And Andy's also saying that silver's kind of might be dragging this thing back to reality a little bit here. So.
Right. Yeah. Okay.
Had a good run,
gentlemen. You guys are doing a good job. I know those are some big shoes to fill in. So.
Yeah, absolutely.
Thanks so much.
All righty.
Thanks.
Have a great day.
John, I wanted to tell a little story here that
Sure.
kind of might cement, how these markets are much more than fundamentals, supply and demand fundamentals, or even technicals today. And I wrote an article on Seeking Alpha. It's out today. It's called "No Good Tariff Goes Unpunished." And basically, it's about the tariff that the U.S. government very quietly put on the steel imports from China, 266% yesterday. And I view this as a highly political move. One of the big things that Trump is running on, and he's getting a lot of support for, is the fact that, he wants to be the deal maker in chief, that he wants to negotiate, that he wants to do all this stuff. So all of a sudden, the U.S. Commerce Department comes out and they slapped a 266% tariff on imports of cold-rolled steel into the U.S. yesterday. This didn't get, and the coal and the steel stocks in the U.S. like AKS just took off. I mean, and they're following through today. These things are up huge. They were up 20% yesterday. They're up again today. So because of 266% tariff. Now, this smells to me like a political move by the administration to take this trade issue off the table for the general election. I can't see what the other motivation would be to do this right now. It's a very interesting thing, and it's just an example of how the political environment in the U.S. is likely to cause huge volatility in markets. Now, if China decides to retaliate and they decide to devalue their currency in a surprise move and in a dramatic move, hey, we all know what happened on August 24th.
Right.
So, it's a very volatile situation here. So my advice to everyone out there trading is, tight stops. When you have profits on the table, when markets reach your levels, take those profits. There's always another chance to get up, have a cup of coffee, come back. There's always another trade out there.
Like you said, I mean, we haven't even had a Friday's close this week, obviously, and a lot of these kind of moves up, and we kind of need to assess where we're, if this is a technical breakout, is this going to get any legs? Are we putting any stakes in the ground and holding those stakes in the ground? Like you said, I mean, basically you coined it perfectly. We're still in a downtrend on a lot of these things, so just keep that in mind. Sure.
Right. In commodities, first of all, a 4-year bear market, we're in the 5th year. That's very hard to break. Now, gold, to me, if I look at a chart, gold has done a lot of work to break out of that 4-year bear market. But a lot of others like copper, silver, platinum, oil, they have a long way to go before we can say, hey, there's a confirmed change in momentum and these things are now back in bull market territory. Listen, gasoline's still $1.20 a gallon.
Yeah, hey, Andy, can we take a caller? He's probably got a question for you specifically. Sure. Do we have Scott from Colorado on?
Yes, hi there.
Hey, what's on your mind, Scott?
Well, I was curious. I've been watching Brazil, EWZ or BRZU, for the last couple of weeks.
Okay.
It's kind of bounced here, and I'm wondering, between watching coffee and sugar, is there correlation? What are your thoughts on both Brazil and some of these commodities?
Well, to me, Brazil is a totally commodity-based economy, and when you're going to get bounces in commodities, you're going to get bounces in Brazil. If you put a chart of commodities against the Brazilian real, you'll see a huge correlation. When commodities were coming down in the bear market, that the Brazilian currency just trashed. So it's not a surprise. I mean, I would expect the Brazilian real and the Brazilian markets to do much better. I would also expect the same for Australia, for Canada, and for the Russian ruble here.
Oh, yeah, Australia. That's my favorite trade right now. Tom, or Scott, excuse me, that's Andy's 2 cents on this, and I'm totally on board with the same thing. I mean, I actually did a Bloomberg brief on this matter recently, and I'm really bullish on Brazil and Colombia, actually. So,
okay.
Thanks.
I really appreciate it. And the last thing I was going to ask is any reason it would correlate with our Dow or S&P?
Andy, if you want to stay on past the break, we can answer that together. Cool. Sure. Yeah, Scott, if you can hang on, we'll get that answer in right after the music.
Thank you.
Okay, man. We'll be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, welcome back to the show. John Logan filling in for Tom O'Brien today. I've got Andy Heck with us, and we were talking with Scott from Colorado. Scott, are you still there?
I am.
Great. Thanks for hanging on. Andy, you still there?
Hi, I'm here.
Great. So Scott was kind of trying to get a heads up on Brazil relative to all this commodity talk we've been doing. And like you said, I'll just let you take it from here because you're the you're the master of what you're talking about here. Relative to the economy that survives off commodities, I'd love to hear your
right there
thoughts
too.
on this.
Believe me, you're right there with me. Scott, I think Scott wanted to know what that meant for the S&P 500. Correct?
Okay.
Well, actually, I am bullish. I never missed your commodity show, Andy. Bullish on some of these commodities. And then I see Brazil starting to make a bounce here about a month ago. But my fear was I'm not so confident in the equities market here in the U.S., so I was wondering, do I need to be careful if I'm not so confident with the U.S. commodities or U.S. market that Brazil might follow?
Well, the first thing I'll say about that is we all have to be careful in all markets today because these markets are diverging all over the place. And I am bearish on the U.S. stock market. Let me tell you why. And I'm bullish at the same time on Brazil. I'm bullish on the ruble right now. I'm bullish on the Canadian dollar, the Australian dollar, but I'm bearish on the U.S. And why is that? One of the most important things that the Fed is going to monitor over the coming weeks and months is the inflation level in the United States. And the way they measure inflation is on a relatively short-term basis. So if we see the inflation rate starting to tick up because we get a rebound in oil and copper and a lot of other raw materials, then it's going to put pressure on the Fed that when inflation reaches its 2% target to raise rates again. And that's going to be a negative for the U.S. stock market and a positive for the U.S. dollar. So I think that this is a year of divergence, and I can see a market in Brazil rallying and the Dow Jones Industrial Average and the S&P 500 actually trashing at the same time. I think, we're kind of being trained that divergence is the norm rather than the exception in 2016.
Yeah, we kind of disconnected from Shanghai recently pretty hard.
Yeah, absolutely. I mean, by the way, the biggest thing to watch out there for all of us is what the Chinese do with their currency next, because that will be like an earthquake, and that tsunami will reach all markets.
Yeah. Scott, another thing, too, like just really corollary to what Andy was saying, a lot of these commodities have put, in my opinion, I think in Andy's opinion, might have put some stakes in the ground. And, crude oil, the coppers of the world, the golds for sure. Brazil is, a dig a hole and sell what's in it kind of place right now. And I see this. I mean, I'm showing technically what's happening here also in that EWZ. We compressed up into the top of that weekly profile and just launched. So now you're, in my opinion, you're looking for support and all these things. Like Andy had said, it's, a lot of these commodities are starting to, spin and get some energy right now. And Brazil obviously would love that. And so would Colombia. So.
Good. Well, thank you very much, guys. I really appreciate it.
Great.
Pleasure.
Thanks. Well, Andy, man, it's just been awesome having you on here.
Always good to talk to you, John. Missed you. And your show is on so early in the morning for me out here in the West Coast that I have to admit that it's like, my beauty sleep time a lot of times. But I love to hear you when you're on Tom's show. And listen, it's going to be a wild market, that's for sure. If these commodities are going to recover, there is so much room. We're talking about gasoline before. Gasoline has dropped from $3 a gallon to under $1 a gallon. A 50% retracement takes us to $2. We're still, we're still way 80 cents below there. So lots of volatility ahead.
Great to have you on, and I'm sure I'll talk to you soon. Thanks.
Thanks so much.
All right, guys, we'll be back right after the next break.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Hi, welcome back to the Tom O'Brien Show. I'm John Logan, filling in for Tom O'Brien. And it's almost like you're looking at Fox at night, and you happen to watch the main show there with the main guy, and Eric Boland's filling in, not missing any names, and it's just not the same. So, Tom, get back here. We'll see you back tomorrow. We're looking forward to hearing your voice again. All right. Andy Hecht was just on, and we were talking about commodity plays and just how some of these kind of worms are turning here, especially on copper. Gold's busting out again. That bodes well for some currencies and economies out there, mainly the Bovespa and the Columbia coal cap, like we've been speaking of. And we're looking at the Australian dollar right now. By the way, I'm showing in the den, I'm showing a guest Bloomberg brief that I did about crude relative to the Bovespa, relative to the Colombian coal cap index, and that was about, what was that, February 18th, so a couple of weeks ago. And the reason, the basis for that report was basically because of the impending possible commodities bottom here. And I'm not saying it's a bottom yet, but I mean, we started seeing some signs and gotten some wins on the board with the Canadian dollar starting to kind of relax a little bit, becoming valued again. The Australian dollar, the reason I have this up is because if we look at this technically, we've had higher lows on Navigator 3 times, lower lows on the Australian dollar, but in the midst of the Chinese meltdown of the Shanghai, and in the midst of the iron ore problems, in the midst of the gold and silver's kind of staying low. Silver, my goodness. And a couple other things that, Australia is one of those countries like Brazil, their economy relies on digging holes and selling what's in it a lot of times. And this Australian dollar had really, really held up, in my opinion. So as we look at this, I'm showing a long-term chart. This has been one of my favorite trades, and now it's seemingly starting to kind of show the green shoots again. So getting back above 71.69 this week was a big time play on this. First stop's gonna be 74.39, but I think this thing could really get some legs and easily see 80. But again, these things aren't going to go in a straight line, and the support and the possibilities around that 71.69, 71.86. We talked about that on the show. It kind of gave me a fake out last week, but again, as a trader, you've got to be willing to turn the wrench the same way. Take the medicine, make sure the stops are in place, keep your risk reward scenarios in mind. And like something Kevin Hinckley said the other day, I was listening to the Think or Swim Hour. His mentor, and again, this cannot be said enough. His mentor is being on the floor, trading on the floor. What did his mentor tell him to make sure he always kept in mind? That he was able to come back and trade the next day. So, and that means if you got to take the medicine, take the stops, do what you got to do. But again, this is a long-term venture, and that's the same attitude that you got to have when you look at this as a long-term business plan. And a lot of folks, when you look at trading, it's, oh God, I'm going to push some buttons and the lights are going to flash and the guy's going to get the cheerleader at the end of the movie. You got to be looking at this as a long-term venture, and part of this process is sometimes getting stopped out. And that's what happened to me on this trade last week. It really was not great, but again, I look at it as, hey, you know what? I'm going to wait until we get back above these levels and play the game the same way. Now, this is a really nice win. So keep that in mind when you're playing these markets. And again, the Australian dollar this is a rally state here. And looking at I'm going to pull up the Canadian here really quick. And this has been something that's just been languishing nicely, compressing down into these unfair lows around this 137.59 area on this currency. And again, when this currency comes down, it's becoming valued actually against the U.S. dollar. And then we had the breakdown. Now we're just we were in a hole for a while in the marketplace, drifting down. But how do you kind of gauge this right now? Since we had that breakdown again on the dailies, you really don't have any reasons to take this trade off on the short side. For a long time, this Canadian dollar was buy the dip, buy the dip, buy the dip. And then when we had some signs, crude oil, kind of that portending attitude to kind of get itself together. If you look at this relationship over time, the Canadian dollar, the ruble for that matter, relative to crude oil, and a lot of these things are starting to show the green shoots or the red shoots, depending on how you're looking at. Let me get this out of the way here. Depending on how you're looking at, the valuation or the devaluation of these particular currencies and what cross pair, how's that regulated? So again, the troops are on the border and crossing when it comes to a lot of these particular instruments. So keep that in mind. I'm going to go back to, we're going to have. We got a real treat. We're going to have Basil Chapman on it in about 15 minutes. So you guys are in for a treat. So hang around. Basil is I listen to his show all the time. He's an incredibly good technician. I learn a lot from him every time I listen to it. And I also use, one of the things about TFNN, listening to this network, you guys are probably already aware of this if you've been listening for a while. It's nice to be able to, to slow your trading down and to get different perspectives and to wait for, I hate to use what Larry's doing, but the stars to line up, so to speak. He does a show right after me from 8 to 9, from 9 to 10 actually. And, listen to Basil and Andy's views, fundamentally speaking. When you have these things all on the same side of the fence, and then you've got some technical reasons, using maybe even some of the information that I put out in the mornings, our profiles, I like to look at things in a very black and white way. Is it okay to be long? Not okay to be short? Okay to be short? Not okay to be long? And then, if the Basils and the Andys and the Steve Rhodes and the David Whites and the Larrys of the world and Toms of the world are, kind of sitting on the same side of the fence, and then we're kind of breaking out outside of these profiles, I'm feeling very good that we've all made this concerted effort in the same direction, and that's really, again, sitting on the sidelines and waiting for those things to, not all of them to line up, but that's difficult sometimes when you're sitting there and they got the keyboard there and the lights are, all the screens are up. I know that's difficult to not do anything, but sometimes it's not what your broker wants to hear, but doing nothing is sometimes a trade in itself. So again, I think a lot of the guys on TFNN have been pounding the desk about these commodities changing tone, and you're going to get some offshoot trades. By the way, the currencies that we just spoke of, some of the indices, the Bovespas of the world, the coal caps of the world, the Shanghai's in trouble, and I think it's here to stay in trouble unless they do some more government rigging, but that's always possible. But you've got some decent opportunities out there now, and that's the way we're looking at it. We're going to take another break here, and when we come back, we're going to have Basil Chapman on.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, welcome back to the show. I'm John Logan, filling for Tom O'Brien today, and I think we're in for a real treat if we have Basil Chapman on the phone with us here.
Hi, John. How are you?
God, good to hear your voice. I'm doing great.
You're doing well there. Yeah, it's great to hear you, and congratulations. Fabulous call on that Australian dollar. Whoa.
Well, it's been a long time waiting, Basil, to be honest with you. I've been waiting for that move for a while. But, hey, what's on your mind?
All right. Well, my service here at TFNN is I have a daily service, a very comprehensive look at the markets every single day. Actually, I spend a lot of time every single day drawing up the charts and doing an overview and the market outlook, short term, intermediate term, longer term, as well as I show the stocks of particular entry points and exit points that we're looking at. So it's a very detailed report. It comes out by starting at about 6:30 in the morning, and maybe by 8:35, I think, is the very last. That's the last slide that goes out to my my service called the opening call, and that's the Traders Corner. So I always show the thing I start off with is the Dow itself, the Dow daily chart, showing the Chapman wave methodology, showing the different configurations and the notation of the Chapman wave. It's really the concept is a very simple one where you look for the most identifiable low bar and you merely count each successively higher peak after that, and the fourth highest peak, peak D, is where other things can happen. So I'm going to show this chart. This is actually for my report tomorrow. It's already done. And
great.
What I'm going to show here is that the similarity, let me squeeze this so that we can see what's going on.
Basil, I got to tell you, I always watch your show and to see how wrong I am, because you give some great information, and sometimes I use it to lean on. I mean, it's great stuff that you talk about on a day-to-day basis.
Well, I appreciate that, and of course, yeah. I have to say ditto here, because what you do is absolutely fabulous. So what I was showing is that the low of August at 15,370 in the Dow, where the Dow went down very sharply in August, and it had like a mini crash in essence. It wasn't a crash if we're looking at percentages, but certainly the feeling was that there was just a plummet. What happened with that waterfall cascade, the Dow went down to 15,370, then had a bounce and then went sideways, turning the 16,000 area into a support, and then it broke out. And I was talking about the match that we were looking at on the 20th of January, that there was same kind of move, not in just 3 or 4 days. It took a while, but it was the same kind of move. The Dow was successful in that it held above the left side low of that August low. They went to 15,450, and then there was a rally on January the 20th, and then it came back and did a retest, and that retest was successful in the sense that it gave what I call the H pattern, and that H pattern held above, and it went to 15,503. And there are 2 candles that I call the Chapman Wave Roman candles. We don't have to go into that, but it's very positive if the price that you're following starts to close above that. We started doing that. Now I'm going to go back to where we are today. So we've been long since we were long January the 20th. We had a switch from the short to the long side. Then we took profits and we got back in on the 11th of February. Back on the long side, and we've added to that position. So we are very long the Dow. Now, what's really important is you see these 2 patterns here. The one is this H pattern that turns into a W.
Okay.
And the other is this lowercase h pattern that turns into a lowercase m. So the fact that in this particular Chapman Wave methodology, having held the low on the right side means that there's a real good chance that the price is going to close above the left side peak, in this case 16,510. So we did, and now what we've done is we've closed, and this orange line is the 200-period exponential moving average, and we're getting closer and closer to that. So I like the action thus far. The MACD is moving well, the slow stochastic. So what we've done is I've tried to find stocks under the radar that people weren't really looking at, or sectors. And basically what we've done is we've got some stocks. For instance, we've had Telephone, which is it's a defensive stock. It gives a dividend, and we've had it since the 34s, and now it's trading at just about 38. It's a 37.99 leg C, so it still looks very good. Very nice percentage gain. We bought Twitter way back at $15.80 on the 16th of February, and here it is trading at $19.31 in leg C also. So that's acted very well. So we've got a bunch of stocks that are doing extremely well. And we've started to go into the commodities for the very first time. In fact, we bought something that is a mix of, it's an index, it's a fund really that has golds, crude oil, soybeans. It's one of those ETNs. We bought it this morning, and it closed really nicely. And one of the reasons is, you were talking about gold just a little while ago, and there's a pattern that I look at in gold, and it looked very much like this consolidation that I call a rectangle formation. This left chart is the daily chart. And basically it's like a flag. We call it a flagpole, and then there's this rectangle. Normally what happens is that if there's a sharp move down, then it starts to move above this 9-period moving average, this black line, you can expect a peak A, what I call a sub buy mode, going from a peak A to a B to a C. But in the 120-minute chart, usually I'll use a smaller time frame, and we just went to a D today, and it broke above the previous high in the daily. So this is, you said that you're looking at gold, and there's a big question. My looking at the gold says that gold has been in a bear market for quite a long time, but it's unlike crude oil or any of the others. It keeps finding a base, and then it has a pretty darn good rally. This is more than a pretty darn good rally. This has got those gold stocks moving very well. So I'm suspecting that we've got a period here where there's a bit of inflation coming in, and the commodities are going to rally somewhat. We'll see what happens with the oil. And gold has had basically a high-level consolidation. And now it's going to be very important on any pullback in gold. Does it retest or break the low that was made right here on the 16th in the continuous contract? Let's go to 1190. Does it break that, or does it hold in the 1220 area and just treat that as a new base, a higher level base? So this is fabulous action in gold. And I think that crude oil, even though I think there's still a glut of oil, I think it's moving quite nicely.
Yeah. What do you mind me asking you a question about the report tomorrow? Do you think that's going to have any bearing really one way or the other? Or do you think we're just going to, the market's going to kind of look at these commodities kind of possibly getting some momentum and saying, you know what, that might be the inflation we were looking for? Or what if you don't mind me asking that?
So that's a very good question. And the answer has to be, I have to just look at it purely technically and then say, I don't care what the report says. These are the parameters that I'm looking at. That's really the way I like to look at it. So let me do two things. I'll do two things at once. One is the volatility index, which I've used for years and years and years. I have certain numbers that I look at. I don't look at the makeup. I just look at the pure numbers. The VIX index has pulled back very sharply. It's under the 200-period exponential moving average so far, but we've got 1 day to go, a really important day to go. So I'm going to make it real simple. The volatility is at 16.70. If it spikes tomorrow above 1760 and holds there, that says that the market is going to pull back. If the volatility index goes under 1620 and the Dow holds plus 80 or more, that's a very positive thing at 10:10 tomorrow morning Eastern time.
Great. Well, Basil, thanks. Thanks for coming on.
Thank you very much, John. I appreciate it.
The economy's coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, welcome back to the show. I'm John Logan, filling in for Tom O'Brien. We got a real treat. Basil Chapman staying on with us. Basil, are you still there?
Yes, I am.
Great. Well, so let's get copper on the board here. If you can show your charts too, I'd love to hear your thoughts on this, because this is one of those, really turning events when these building, as Andy was speaking earlier, the coppers of the world, the lumbers of the world, the crude oils of the world start really kind of changing their tone possibly. What do you think this is a blip here, or what are you thinking?
So if you look at this very long-term chart of copper made its high back in the beginning of 2011, and it's really come down. It's broken key support levels in the monthly chart. This is a very long-term chart. And basically what I'm looking at is at 2.21, this is the continuous contract, which is very close to the actual price right now. So you've got the 9-period exponential moving average of 2.28. But what's really important is that if you look now, I'm going to expand the chart a little bit, and you'll see that black moving average line the copper's barely held above it for very long in all these declines, and it's basically like a stair-step move. So my contention is that China probably has been doing some feeding into the economy, putting money into the economy. And I wouldn't be surprised if we see some residual buying, and so we'll see it filter. It takes a while. So this is now about the 3rd month since the low in copper. So it's going to be very important. I'm going to do a couple of things at the same time. Copper, this is the continuous contract, and you can see that even now, this is just merely a blip. If you look at the stochastic, yes, it is turning up, and the MACD is flattening out and trying to turn. It's really important in a chart like this that there's not just sustainability of sideways movement. Copper really, this orange line, the 200-period moving average, copper needs to break above it into the 2.57 area before I could even say that this is more than a blip. At this point, I'm treating it as if this is just a very important a relief valve after. Look, in essence, you couldn't say there's too much difference from the August rally. But the big difference is that the time that's been taken in the weekly chart, and now all of a sudden you're seeing all the technical. You see how strong the stochastic is here, much stronger than it was. MACD is good. I've got one sign here that's indicating that there's going to be a lot of resistance to the 222 to 223 if it gets there. But the daily is in leg E. Now, I'm going to put another chart. I hope I can do this here because I usually do it on a different chart. Actually, I'd like to do it on a different chart. If you can take just 1 second, I'm going to switch. And that's the chart. WOOD is the symbol. It is an ETN, I believe. I'll find it right here. There it is. And this chart is wood is the symbol, and basically what it is. Let me move. These are the yields. I'll get the yields out the way for now. This is a chart I wanted to show. This is the weekly chart of the iShares Global Timber and Forestry ETF. And this move, look how sharply it's come down from 56.69 way back in 2015. I think it was February or something. Yep, February of 2015. It came all the way down to right there at 38. That's a big move. That's 18 points. Yeah. And now it's having this counter-trend rally. I'm calling it a counter-trend rally right now. And this is the housing. See, so copper, housing sometimes go together. And in this particular instance, you're seeing that the housing market is moving very nicely, and the Philadelphia Housing Index has come down very sharply to trough D. These are what we always look for. This is a nice move. So I'm suspecting that whatever the report is tomorrow, and I suspect that we're actually seeing a better job recovery is being reported. And that might show up tomorrow. I'm not sure. So is that going to say, hey, wait a minute, now we can move interest rates up? So that might make the market a little nervous. But the way the chart is acting right now, it says that there might be a pullback, but if we can recover from any pullback by Tuesday or so, and copper moves higher, there's this wood chart, the housing sector chart moves higher, then I think that this rally, and I really do believe that a lot of fund managers have missed this rally completely. It was so quick, it was so sudden, it was so sharp. I bet that a majority of these fund managers are just sitting there saying, oh, I wanted to get such and such, and now it's moved. So the last couple of days, you've seen some chasing of stocks. So maybe we need a little bit of a rest. But if you're looking at the yield chart, look how the yield has turned. This is the 30-year, the white one. The yellow one is the 10-year T-note. And the 5-year plunged, and now it's coming back a little bit. I still believe my thesis has been the Japanization of our bond yields. I've had that for about 12 years. That says yields are going to stay low because the economy is going to be, it's going to befuddle the people at the Fed. They're not going to be sure what to do after this. And I think this is, so I'm treating it as a counter trend rally in the commodity sector right now.
You know what's wild, Basil, when we heard a lot of news the past 6 months that some of these commodity funds were just completely thrown in the towel. You remember?
Yep.
Some of that, and I'm sure Andy will talk about this a lot on his show. As it's almost that's the indicator you're looking for. You remember in 2008, all the short funds, or 2007, they threw in the towel. It's like everybody's just running for the exit. Finally, we can't handle this anymore. And now that you've got that type of, this is fundamental, obviously, that type of news out there, like Glencore's having the problems, and a lot of these commodity funds, if you will, are like, oh my God, we're sending everybody their money back.
And the news is getting worse and worse because a lot of them have been in the wrong positions, and now this is where they are. This is where they're at their worst because they don't want to put the money up because they've lost it so many times, and yet the market's moving against them. It's very frustrating. And looking at the Reuters Continuous Commodity Index, this has a weighting of all the different commodities, and you can see that it just keeps slowing down. And here's this trend line. It's just holding it. So this is going to be very important. But, I think that we're in a world, a deflationary era. The competition, even for yields, that's why yields are remaining low. There's so much competition for yields, for lower yields, and it's the same thing with the commodities. There is so much competition out there for the products that I think it's just kept pushing prices lower and lower. So this is going to be a very important period. What happens over the next few weeks, I think, is March is going to, for commodities, is going to be really important.
Well, wow, that's a great perspective. Do you just final question really before we go to this next break in about 45 seconds? Do you think this commodity kind of move is kind of sparking, like feeling the S&Ps are going to kind of use that to in any capacity to say, you know what, wow, we are going to have some inflationary moments here finally, and the market may like that? Or what are your? That's kind of a broad.
That's a very good question. I think that the way I would have to answer that is that because we have a number of very important oil companies in the S&P, that we might find, I've called this a rotational, for a year, exactly a year, we've had a rotational correction. But I think we've also had a rotating recession in different sectors. So how the market handles this, because it can rotate through different areas, is going to be very important. I think we're finding a little base here in the Dow at about 16,200. We'll see.
I'm with you. Thanks, Basil, so much for coming.
Thank you very much, John. Have a great evening.
Yep, you too.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi, guys. Welcome back to the show. I'm John Logan, filling for Tom O'Brien. Got about 15 minutes left on the show today, and it was just completely awesome to have Basil and Andy on today. This is just a treat to listen to the comments from those two veteran technicians and Andy with the fundamental slant on a lot of these commodities. And I think we're all on the same page, really. I'm looking at Archer Daniels Midland. I mean, this is a stock that, you know, really taken it on the chin since the mid 50s. But I got to show you, if you're seeing my charts right now, you know, the dailies, we start, you know, this is what I really look for. And this was also a piece of the puzzle when I was looking at the XLE, higher lows, a little bit of divergence going on, the Australian dollar, Canadian dollar, putting all these pieces together. You just have to not turn a blind eye when it comes to looking at the commodities possibly being spring loaded. This is, and Andy's actually saying something about ADM in the den right now. But when we started getting the green shoots on the intermediate, kind of breaking away from the pack above this 34 area, that was another indication recently that, you know, it might be okay to get back in the water on a lot of these commodities. Here's that daily, here's the weekly. So what we've done now is that big 34, 35 area. Now I think, in my opinion, you can use that as a base, as something to lean on. I'm looking at our weekly profiles right now. And by the way, I didn't finish my thought a while ago. Let me go back to the daily. This divergence here, lower lows, Archer Daniels Midland, and then we had higher lows on Navigator. Now we're crossing above the zero line, you know, for the first time in a long time, actually, on this stock, as far as our Navigator goes, which is this bottom indicator that I'm showing. And that coupled with getting back at bare minimum into a balanced area, which we've been really kind of trading below for a while, above this 34, 35 kind of DMZ here. Targets on this initially, in my opinion, are around 39. Again, things don't go in a straight line, so just be aware of that. But, you know, I think that, you know, this particular company, obviously commodity driven. This is this look, I mean, we've had a very good run recently. Remember this, you know, you want to be looking at this as a buy support situation. I think support right now is going to be around 36, but I'd be looking to really take a hard look at this from the long side. You know, that being said, we're gonna take a gander. We're going to take a look at soybeans here, and I'm going to pull up the May contract. And let me save this here so it won't flash again. As we look at this May contract, the front month, this one is without question not, you know, the darling of the commodities world. And, you know, I've been looking at soybeans in general. You look at the continuous contract, you look at East contract. I don't like to look at the continuous contract a lot with these particular commodities because they have different, new crop, old crop, that kind of jazz. But this actually is something you might want to just kind of stay away from for a while. We've got a floor here at around, this is my opinion, at around 860. We had a previous unfurl on a weekly around 861. I don't like the way this thing has actually met resistance for the most part every time, and then continued to kind of compress down. There's a lot of fundamental reasons for this. I'm sure Andy will get into that. This is the type of action where you look for lower highs compressing down into this baseline. I don't look at this as a basing action. I look at this as ultimately we could see just an incredibly painful flush before we turn around in this particular product. While we're on this commodity scene, this is this is something where you could have some people just completely giving up down here, hitting the door at the same time. And then what we'd look for on this kind of product is we'd look for some new information to appear down here and let somebody else fight out the lows or catch the swords. Again, I don't see this as any type of basin action on beans right now. It's really a sad situation. I've got relatives that are farming thousands of acres in the eastern part of this state, and they are just not the happiest people in the world lately. My uncle farms thousands of acres of corn, and he's about ready to jump out a window. I asked him, I said, Uncle Bill, how much do you plan on making per acre, period, if everything works out correctly? He said in a normal year, and again, this isn't the breadbasket of the earth here, but and I've got friends that have elevator operations, and he's just saying, man, this is incredibly painful, and he's break even is a big deal right now, all things considered. So yeah. And Andy's saying fertilizer's cheap. Fertilizers never seem to kind of ratchet down with crude oil totally. That once they go to a level, it's almost like they're ready to gouge the farmer again. But I hear you. Okay, so getting back to, I want to talk about the financials for a little bit, because we've got this, note situation we've been talking about relative to the report tomorrow. The commodities rising a little bit, that could be taken as somewhat inflationary. The financials with this stagnation of the yield curve, which again may start showing some. There's a lot of different thoughts on this. We could stay in a range, but if the notes start showing some type of fallout here and Treasury yields rise a little bit, I'm still looking at these financials, and I'm kind of a big fan of the notes and the bonds staying in a little bit of a range. They might do a little bit of a move down here tomorrow, but 2237 on the XLF, I'm still looking at that as, hey, we've had a good run here. We've had what is this? If we meet that target, we've had from 20, so about a 12% move if we meet that target. I'm looking at that as a lid. I wouldn't get too jacked up about looking at the banking stocks right now as the best way to put money to work. I still think that's going to be a languishing type ETF in general and all the components. But that being said, the utilities have really still, even with this report, I mean, we had Steve Banger on earlier. He was kind of a fan of maybe these things might trail off a little bit, but they keep finding support after this breakout. And 45.66, we found it again. If the report's not exactly what the inflationary world wants to hear, this particular ETF could easily see 47.28 and even higher. So remember, stops on that type of trade below 45.66. So that's the situation on that one. Okay, in closing, I want to go back to gold for a second. Remember, we've met the targets on gold. We've reached these weekly unfair highs for right now. We've had a great run. We've kind of poked our head above and created some new highs recently. I think, for you guys out there trying to trade the gold stocks and gold in general, this report tomorrow, we're going to have probably a lot of volatility and a lot of instruments after this report, just adjustment of positions. And, if we bust out and go north again, remember that can be used as support on pullbacks. So again, gold, I think, is a sit on your hands a little bit here now. We've had a good run. We've met the targets, and we'll see what happens after that. But right now, I think you got to sit tight. You've been great today, and Tom will be back tomorrow. And thanks, Andy and Basil, for coming on today. It's been great. And we will be 8 o'clock in the morning, Global Market Pulse. We'll see you then.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Well, guys, we're back for one more short segment, and that's my fault for closing the show early. My apologies. We're going to take a look at the Shanghai really quick here. Again, you know, this is something we talk about on our show in the morning a lot. We've got this 2742 sitting here, stake in the ground on the downside. I'm not so sure that Shanghai is going to cooperate with all the things going on the planet and the commodities possibly rallying here, and the S&P's seemingly busting a spring right now. There's been a serious disconnect with this particular index, and I want to talk about this for a little bit. Had the kind of internet stock kind of move up that started when we started breaking above profiles way back in June of 2014. And now, as we look at this, I'm going to pull up our scanner really quick, and I'm going to go to my indices heat grid, and I'm going to drill down into the Shanghai. I'm going to look at our weekly. It is one of the stocks, or excuse me, the indices, as far as net profile breadth calculations, still in the cellar here. And I want to pull up our weekly. It's interesting that we are starting to look at that top of the profile, 3,000 general area. What was the level there we were looking at? let's see here, 3,056. So for this thing to really get any type of technical breaking away from the current downtrend, we're going to have to see that broken, and we're also going to have to look at this breadth calculation, which is the internals in a summated type way. I'm going to kill the middle ground there. Got a lot of stocks converting to the middle ground on the Shanghai. This is Shanghai 180. But if you'll notice, going back in time, this October 16th crossover into positive territory, a little bit of a trading situation. First of the year, we broke down again on our breadth. These are the internals. We want to see this cross into positive territory. This particular indicator has really been spot on when it comes to, the barometer of the Shanghai in general. So we had that big turnaround, 619 into 626, 2015. That was just the time to, really look at this as a turning event. Then that 1016 crossing the positive territory for a little bit of a trading bounce. Let me go back to show my chart here. Just found out we weren't showing this. And then, July 2014 was when this thing started busting out on the breadth calculations relative also to the index profiles themselves. So we were to get really excited about this particular index starting to change back north again. You want to see this cross into positive breadth territory in the long-term weekly. That hasn't happened yet. There's no reason, in my opinion, to and let me go back to our Shanghai here. Let me see. I think we got our chart again. So again, this is something we want to see break back above the 3,000 neighborhood. We want to see that breadth change to positive, and then we might be able to start looking at buying support on this thing. But remember, there's not a lot of things going on in China as far as the indices go that really have a lot of bearing, seemingly, as Andy was talking about earlier, these disconnects that are going on globally right now. This is, again, just a singular trading situation. And if the U.S. market, continues to weather the storm a little bit and then uses that 1975 to go higher, rising tide lifts all boats, you may see just some sympathetic move up in here, even though there's a disconnect in these markets. But again, I wouldn't even play around with any ETF associated with this thing until we got some of the, moves above this 3056 area in the index itself. So just keep that in mind when you're playing around with China ETFs. Again, let's close the show one more time. It's incredible I'm doing it twice in one day. But thanks, Basil and Andy, for coming on today. You guys have a great night, and we'll pick it up at 8 o'clock in the morning.